Well, good evening and welcome to this live stream on the 23rd of December 2025. It's Martin North here from Digital Finance Analyst. It's great to have you on this evening. Thanks for taking time out of your pre-Christmas preparations to spend it with us. Really appreciate it. And for those watching in replay, welcome. This is going to be a really interesting and important conversation point because it's talking about the nature of money, the future of money, and specifically stablecoins. And Adam Stokes is going to join me in just a second. Just before I bring him in, a couple of quick reminders, as I always do. But we're not providing specific financial or legal or anything else advice. It's a general conversation. If you would like to get your question in or get my attention, if you use that What the World DFA, that'll show up in my queue. I've enabled Super Chat, which means if you want to make a contribution to what we do around here, you can do that, or indeed get your question to the top of the list. That's a way of doing that too. We really appreciate those who support us via Super Chat, via Patreon, or via PayPal. It really helps us to do what we do here. We don't do this for profit. We do this because this is a really important conversation to be had, and your support enables us to keep going. So really appreciate it. Right, let me bring Adam straight in. Hi there, welcome back. How are you?
Martin, Merry Christmas. Great to see you.
And Merry Christmas to you, and nice to have you back on. I think it's going to be a really interesting conversation point this evening because there's a lot happening below the waterline. And what I've noticed in some of the sort of publicly facing statements is they're giving a little bit of a clue, but actually there's quite a lot more really happening about the future of money. And in fact, I made a show the other day called Let's Paper Over the Cracks for a Santa Rally, because superficially you could argue that the markets are actually not doing too bad. If you look at the latest in terms of well, let's look at the the ASX 200. It's up again, not as high as it was a little while ago, but it's not doing so bad. But then when you actually look a bit more closely, you can see there that things like the yields are up higher than where they were, and that's a little bit of a concern. One of the reasons why the RBA may not cut anymore. In the US, of course, the S&P 500 is also touching all-time highs, and the NASDAQ, of course, is also pretty strong. And so people are talking about the Santa rallies intact, et cetera, nothing to see here. But again, it's worth just reflecting on the fact that the yields are actually, this is the 3-year yield, is actually quite a lot higher. And interestingly, the 10-year yield is also up a little bit too. So there's a real contention going on at the moment in the markets. And of course, if you look into Japan, well, there you go. There's something happening in Japan, which is not actually totally surprising, but quite concerning with the yields strong there. As a result of that, the Nikkei's looking pretty strong, which is not surprising, but this is the really interesting one, the yen US 155. So all of that is saying, well, superficially things are looking okay. And then if you go to crypto, just to sort of finish the picture here, this is the latest on the crypto. So you can see Bitcoin there at 87. So it's wobbling sideways a little bit, and Ethereum following along. So at one level, Adam, you could actually argue that there isn't much to see here. The markets are doing their normal thing. But I want to propose to you that there's a lot more going on below the surface. And I do think that we're actually now beginning to get to the point where what money is and how money works, and very importantly, who's in control of the agenda, is right on the table. What do you think?
So much to unpack, and it's a great topic because the reality is we are in a currency war right now. We are fighting for money, not just to earn it, but who gets to print it, who gets to control it, who gets to be the narrative for money. So you've got the gold buff saying, well, gold is the perfect money. But the problem with gold is I can't use it in day-to-day trading. That is, I can't use it at the shop. I can't use it on the internet. And so, well, I'll write a note against the gold. Well, the problem with that is that then the gold is centralized, it is double spent and eventually confiscated and then de-linked. We keep seeing that over and over again. So we say, well, you can trust us. We're going to be the ones that you can trust. You can trust America. Well, we saw what happened with America, $38.5 trillion of debt, of money printed out of thin air. And so, well, okay, well, we'll get BRICS to do it. Brazil, Russia, India, China, South Africa, and a whole heap of other nations who are joining it. And we're going to back the currency with a basket of goods. And it's like, well, how do you verify that? It's like, well, you can trust us. She'll be right. So you start to realize In the first instance, what is money? Well, in accounting terms, store of value, medium of exchange, unit of account. But it's also a language, and it's also about trust. And it's also, in many ways, a store of energy and a store of effort and a store of time. And of course, this is where I lean to Bitcoin. But the topic tonight is more about what's going to be happening with stablecoins and the currency wars that we're in. All fiat always fails. That is a matter of fact. And the other matter of fact, which triggers a lot of people, but I've got thousands of years of data to back up what I'm about to say, all gold-backed currencies also fail. That doesn't mean gold doesn't have a value. It's just that as soon as you centralize gold in a vault and write a note against it, you're back to square one. And if you can look, I'll bring in Peter Schiff into this because why not? Because he's the arch enemy of Bitcoin. But what Peter Schiff is now saying is he's saying, well, what we're going to do in the Schiff company is that we're going to hold gold for you, and then we're going to write a digital note against our gold, and you can trust us. And it's like, well, hang on a second, let's review, mate. So no other empire in history could do this. The Americans couldn't do it. The Brits couldn't do it. The Dutch, the French, the Portuguese, the Roman Empire. But you, Peter Schiff, you are going to do it. And the only reason why I use Peter Schiff as an example is it's not about Peter. It's about he's obviously the forefront, the speech, the voice, if you will, for gold. And I have a lot of respect for Peter Schiff because he believes in his currency, and he's very confident and to an extent competent in coming forward and debating us in the Bitcoin land. And we have consensus that the biggest scam in the world is in fact fiat, where they print it out of thin air. But for us, the solution is very different. So we have to ask ourselves, if we're going to use a yellow rock, if we're going to use a white rock, as in silver, if we're going to use a basket of rocks, if we're going to use a basket of goods to back up money, how do we trust it? And it all comes down to trust. Again, the accounting term for money, store of value, medium of exchange, unit of account. Cool, that makes sense. But how do you trust it? How do you verify it? And if we say, well, you can come and look at the gold in the vault, it's like, well, really? Let's do a thought experiment, Martin. So the dollar is collapsing. It's collapsing because all fiats always fail, and they're going to extend the life through the stablecoin, which we'll talk about a little bit later. But everyone's competing to be the currency, because when you can print the money, you don't care what laws are in place. You don't really care who's in power in politics. You don't really care what's going on around you, because as long as you can print all the money in the world, you've got all the control. So we know this throughout history, is that if you can print money and have unlimited resources per se, you can really control what's happening around you. But this is where it's shifting now, because people are waking up and they realize that when it comes to the US dollar, you know what? I don't trust that dollar anymore. And on the global stage, even if you don't want to look at the retail or the institutional, we now look at the federal or national per se, you can see that wrongly or rightly, when the Americans cut the Russians out of the SWIFT network. So Russia goes into Ukraine. America says, we'll show you. We're calling you oligarchs. We're cutting you out of the financial system. We're basically voiding all the bonds that you've got with us. We're seizing your bank accounts. That was a catastrophic move for the United States in the long term. It was a catastrophic move for the US dollar forever, because now the whole world knows, and I'm not talking about just you and me, I'm talking about China, I'm talking about Russia itself and Brazil and all of these nations, including us, who say, well, hang on a second, if we upset America, there's no tribunal, there's no court of appeals. It's just like, no, we're blocking you out of the financial system. We're voiding all the yield that we owe you on the bonds. We're confiscating all the money in your bank accounts. You're out. So now there has to be an alternative. And the alternative is this. We've got a few options. Okay, so we keep going with the US dollar. We go with gold. We go with BRICS. We go with Bitcoin. Or we go with Peter Schiff's, as an example, a single entity, a bank, an individual, a company, it's irrelevant, who goes, no, 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 no one else can do it. You can trust me. Give me all your money. Give me all your yellow rocks. Give me all your diamonds and all your real estate. I'll print a note against it and she'll be right. So the question is, what will the world choose? Will the world choose another centralized currency? Or will they go with a decentralized currency? And where we come into this space with Bitcoin is that we say we have never had this option before. We have never in the history of humanity had the option of a decentralized currency. And anyone who believes gold is a decentralized currency, I respectfully suggest that you look at economics, look at finance, and look at history. Gold is always eventually centralized. It is centralized in a vault, double spent, and confiscated, or centralized, diluted, clipped, and confiscated. So gold has a value, absolutely, but can it be used as money? So it goes back to your first question. What is money? What is money? And how are we going to use money? This is where we move into the relationship of stable coins and Bitcoin. Stable coins gives us the technology, the ability to move value around the world with very little friction. Now, whether that stable coin is pegged to a block of gold, a US dollar, a barrel of oil, or a bottle of water, a stable coin is like an email in the sense that email enabled us to move information around the world at almost no cost with very little friction. Stablecoins and cryptocurrencies give us the same technology, but with value. Instead of us sending information, the Internet of Information around the world very quickly with very little friction, and with no intermediaries where we need permission to say, can we send this letter through Australia Post, through this other postal agency? We can now just send an email. Well, now we've got that ability with money. I don't need to go to the SWIFT network. I don't need to go to Western Union. I don't need to go to the Commonwealth Bank. I don't need to wait 3 business days. I don't need to deal with exchange rates. I don't have to deal with 9 to 5 business hours. So the whole world, whether we like it or not, will absolutely move to where there's less friction, more speed, and lower costs. And that is cryptocurrencies. We then move into the debate is like, well, is it going to be a stable coin? Is it going to be Bitcoin or Litecoin or Ethereum or this coin or XRP or that coin? That's the debate that the market will choose. But at the moment, we are moving from where we are in a broken, olden day, prehistoric system of transactions of taking 3 business days to immediate, permissionless, open, borderless, censorship resistant transactions that everyone, once they use it, they never go back.
And that really is the point. And it's fascinating to me that the conversation is now saying not if, but when, right? And not will we, but what to. Those seem to me to be the critical questions now that are definitely bubbling along. And it is interesting. Here's the Digital Euro website. It's worth just tracking what the Digital Euro is about, because they are talking about the national central banks to look at the possible issuance of a digital euro. It will be a central bank digital currency and electronic equivalent to cash. And they say it would complement banknotes and coins, giving people an additional choice of how to pay. And it's interesting that they actually talk about the evolution of money on this website, because, of course, cash will continue, they say, to be a payment option, won't be replaced. At the same time, to ensure that our currency remains future-proof, it needs to evolve in line with people's payment preferences. Similarly to cash today, the digital euro would bring inclusivity and privacy. And it's talking about making our lives easier by giving us the choice to pay with secure means of payment, which is universally accepted throughout the euro area. Like cash, paying with digital euro would be free of charge for everyone in the euro area. And they then draw a very important distinction between what they call the digitalization of money. Cash will continue. At the same time, we need to have a different play, making our lives easier. And here's what is central bank money. The money that the ECB will create is called central bank money. The cash in your wallet or purse is central bank money. In fact, banknotes and coins are currently the only kind of central bank money available to the public. Central bank money is also called public money because it's issued by a public institution, the central bank, whereas private money is actually the stuff you've got, your bank account, balances, savings, etc., private money. So they've drawn this distinction between the central bank world and the private money world, and they say the digital euro is actually going to, bridge the gap. And that's quite an interesting way of trying to justify what they are doing. And by the way, in 2026, they say they're planning to launch the digital euro. So in Europe, what we have, Adam, is the digital euro being thrown up as the solution to that problem of the future of money, right? Now, let's just compare that with what's going on in the US, because the strategy there looks quite different. And it's quite fascinating. If you take the Genius Act, of course, the Genius Act being the reports and then the law that was brought in by the Trump administration. This is the fact sheet from the White House saying we're going to make America the leader in digital assets. We want to protect consumers in the digital marketplace. It's a long overdue legislation. Create 100% reserve banking with liquid assets like US dollars or short-term treasuries. And there's various compliance issues. They want to make sure, and this is the critical, the US dollar global reserve currency status is going to stay there, and we're going to combat illicit activity in digital assets, and we're going to make America the crypto capital of the world. So you've got, to my mind, very different thought processes going on in the euro versus the US. They're not going down the same track, are they?
It's all smoke and mirrors. So that article that you brought up, or the website that you brought up from the EU, is very fascinating because what they're doing is they're actually grooming the people. They're grooming the people to say, okay, we're going to make your life more convenient. Now, we go back to the core, and I apologize to repeat this. What is money? Store of value, medium of exchange, unit of account. So what they're really grooming the people on there is not the store of value. They're grooming you on the medium of exchange. Hey, use our money because it's going to be easier. We want to make your life more convenient. Oh, and by the way, don't be scared because there's still going to be cash. You can still use cash. She'll be right. But no one's talking about the store of value. And you say, yeah, but Adam, I can put cash under my bed. It doesn't mean anything if tomorrow that cash is worth half as much and the next day it's worth half as much again. So it's not a store of value. We look at stable coins then and we say, well, what's happening in America? So in America, what they're saying is, hey, continue to use the global reserve currency because we're offering everything that the EU's offering because we've already got the global currency, but we're also offering stable coins, which give you very little friction. And the reality is, Martin, is that the EU doesn't have a hope in hell. They do not have a hope in hell because all they are doing, first of all, they're broke. Everyone's broke. Every nation is broke. They just keep printing money out of thin air. They are all billions, trillions of dollars in debt. Even Australia, over $1 trillion in debt, with one of the relatively smallest populations with the amount of resources in the ground and the amount of landmass we have and the amount of potential we have, we are still over $1 trillion US in debt. Absolutely appalling, disgusting. So the EU is in a way worse position. So they're like, right, we want you to use our money and we're going to sell you on using our money through convenience. Now, the reality is we already have the convenience. Everyone can already tap and pay with their card. Everyone can already use a QR code. Everyone can already text money to one another. But when we go to the global stage, for example, if I want to text someone money in Australia, many people say, well, I can already do that with my account. That is, if you've got a certain bank account, you can just text the money through internet banking or through just a mobile phone number. There's a few ways to do it, even through PayPal to an extent, but there's a lot of fees with that. So we're quite accustomed to digital money. And when we look about the global stage, though, that's when I can't text my Australian money from an Australian bank to an international bank account. So what the EU is doing is they're saying, well, hey, everyone in the EU, you can text your money to each other, you can tap and pay, it's going to be really good, and she'll be right, you're going to love us. But nothing changes, Martin, when it comes to the issuance of that money. What the EU is doing now is with the CBDC, they just changed the name because the whole world was scared of the central bank digital currency. What's a CBDC? It's just a worse fiat. It's a more efficient fiat. It's a better fiat for the government. It's a worse fiat for us. Why? It's easier for them to print. It's easier for them to monitor. They can even burn the currency. You want to get rid of inflation? Cool. We're taking 30% of everyone's CBDC and we are burning it overnight. Boom. That really brings down inflation. But of course, they're not going to burn their own currency. They'll only burn the currency that's in your wallet, your bank account, in your holding. They're not going to burn what they have. What they'll do is they'll burn, and we call it burning, digitally burning everyone else's holdings, because that, of course, reduces the supply, which increases the purchasing power. And then the EU can then print more of this stuff and rinse and repeat, rinse and repeat, rinse and repeat by pushing inflation out into the people. The people pay for the inflation and the government forever gets to print. When we look at the United States, it's no different with what they're doing with the stablecoins now, except they've got a massive leg up because the United States dollar is already the global reserve currency. But stablecoins, again, stablecoins can be linked to anything, but stablecoins are predominantly linked to the United States dollar. What's a stablecoin? Simply, it's a digital representation of a dollar or a digital representation of something. So America already has a massive reach with A, the US dollar, but B, the huge amount of adoption of stablecoins, US dollar backed stablecoins. I myself, as an Australian with money, prefer using the American dollar over the Australian dollar. Why? Because when I use an American stablecoin, I have better purchasing power. It's losing value less less quickly. It's fun to say that than other currencies. So the Australian dollar is losing its value very quickly. Other currencies are losing their value very quickly, and the American dollar is losing its value quickly, but not as quickly as the Australian dollar. Equally, when I'm working on the global stage, it's easier for me to use the US dollar than the Australian dollar. Equally, as I like to save in some currencies, I mainly save in Bitcoin, but I can save in Bitcoin and real estate and gold to an extent. But if I had to keep $1,000 ready, I'd rather keep that $1,000 in American dollars than Australian dollars. And the same goes for the European Union. Would you rather hold euros or dollars? And you don't even have to ask me or yourself. You have to ask the market. And the market wants the US dollar. So, of course, what the US dollar is now doing, and it's actually quite genius, is that they're actually leapfrogging the Federal Reserve. They're leapfrogging inflation for their own people, and they're printing more and more and more of this money through issuing bonds, which can then back up the stable coin. Because in the past, the stable coin, when it was printed, you needed US dollars to have 1 for 1 US dollars for a stable coin. But now, if you issue a treasury or a bond, you can now have an imaginary piece of paper backing up an imaginary digital note. And that imaginary digital note, instead of being pushed into just America, where the American people have to deal with the initial hit of inflation, the world is already infected, for want of a better term, infected with all of these stable coins, all of these US dollar stable coins. So America gets to print all of this money and front run the inflation, with the world dealing with the inflation, because we're already using the US dollar. But now that US dollar through a digital currency, through a stable coin, has less friction, more speed, more reach, more adoption. And the European Union is rightly saying, oh my God, this is bad. We're already in a huge amount of debt. America has already got a massive front run on us. The world is waking up to a CBDC. So we need to, A, compete with the CBDC. So we'll change the name. We need to groom the people to say, well, it's not a CBDC, it's a Euro digital dollar or a Euro digital currency. It's like, it's the same thing. It doesn't matter. They're printing money out of thin air. So this goes back to what we have right now is we are in war. We are in a massive currency war. Those with their head in the sand, they're really focusing on, this probably sounds disrespectful, they're really focusing on yellow rocks and white rocks. It's bigger than that. I'm not saying that gold and silver doesn't have a value. Of course it has a value. But for those who say, well, Adam, look at gold hitting an all-time high and silver hitting an all-time high, what they're not seeing is that that's not a yellow or silver rock hitting an all-time high. That is what it's compared to, the US dollar hitting an all-time low. So I'm telling you right now, gold is going to go higher and higher and higher and higher and higher, and so is silver. Why? Because what you're comparing it to is forever printed. That price is going to continue to go up. But what everyone needs to ask is your purchasing power going up? Can you now, if gold did 100% this year, can you now buy double of what you could before with a piece of gold? You can't. You can't, because everything around you has not gone up. Well, in some instances, a lot of things around you have gone up double. So gold is doing what gold needs to do. It's maintaining its purchasing power. It's not directly linear where it's just perfectly synergized, but you can absolutely see that gold is holding its purchasing power relative to the real cost of things around us. Bitcoin, sorry to bring it in, but Bitcoin, even with its recent pullback, short-term pullback, is increasing its purchasing power. And all fiats everywhere are losing their purchasing power. So all egos, all emotions, all opinions aside, this is the reality of what we're facing. All fiats always fail. That is a matter of fact. All nations are in huge amounts of debt. That is a fact. These nations are trying to print their way out of it. These nations are pushing inflation onto the people, not themselves. We don't have a cost of living crisis. We have a cost of government spending crisis globally. It is destroying us all, including governments themselves. So it leaves us with this decision. Do we want a money that constantly loses purchasing power? Do we want a money that maintains its purchasing power but has massive demurrage costs? What's that? So if you think about gold, what's the cost of storing gold, moving gold, holding gold, verifying gold? That's a big cost, a huge cost. Or do we want a money that has very little friction and increases its purchasing power? Now, to me, it's very clear. I don't want a money that loses its purchasing power. I don't mind a money to an extent that holds its purchasing power, but that's got a huge demurrage cost. For me, I choose a money that increases its purchasing power and has very little friction, and I don't need permission from other people to use it. So where do we go from here? The question is which fiat will collapse first. So they're all starting to fall like a house of cards, and all fiats are going to fail, but the last one that will fail will be the US dollar. And what's going to happen, this is my prediction, spectacularly, all other currencies are going to fall through the floor. They're going to try and print their way out of it. And then the people, you, me, the people of the world are going to say, quick, I need to flee to a money very quickly. And what's the first money they're going to flee to? Well, some like to go to yellow rocks, others like to go to Bitcoin. But the immediate one that people are doing right now, as we speak, is they're going to US stablecoins. And Trump can see it, the American people can see it, Scott Bessent can see it. They can all see it. It's like we're on a good wicket here. We've got the technology, we've got the brand, we've got the reach. Now, instead of printing money and putting the debt onto our people, we're going to print money and push this inflation, this debt onto the world economy. And the big scary thing is this: at a flick of a switch, a stable coin is a flick of a switch away from becoming a CBDC. So my fearful prediction is this: is that once the world is infected with all of these US dollars, these stable coins, and then there is actually too much inflation of the US dollar, just as I said with the euro and the CBDC, there is nothing stopping technologically, morally and maybe legally, but technologically, there is nothing stopping the American government or those who are pushing the American US dollar stablecoin issuers to say, right, we are burning 30% of the supply right now. Flick a switch and then 30%, 10%, 20%, 50%. It's irrelevant. All of that is just burnt immediately. Inflation has dropped very quickly. And America is like, cool, we're good to go. Let's fill up the tank again. It's some scary stuff. And the way out of it, in my opinion, is get into Bitcoin.
I thought you might say that, but it is worth just reflecting on this, isn't it? There's been a big stoush between the Federal Reserve and the White House or the Treasury Department, right? And it's true, I think, to say that with the Treasury Department now being able to issue treasuries and people using that to back stablecoins, that's outside the Federal Reserve's bailiwick.
That's right.
So in a way, what we're doing here is we're actually reducing the power or the authority of the Federal Reserve, which of course was the central bank of all central banks. And it's worth reflecting on the story here with regard to the balance sheet of the Federal Reserve. Right, it has actually dropped, and you can see there now it may come back up again because of the recent announcements they made. But I would argue that one of the things that is driving this is the wish to grab power back from the central bank, from the Fed, and effectively sheeting more and more capacity to create more and more debt liabilities in the system, which is what you've just said. So they'll keep doing it, but they can extend it through this stablecoin play. And interestingly, a little while ago, we got this question that came in on the chat, which I thought was quite interesting, and maybe we can link it through. How does the central bank digital currency and modern monetary policy theory, MMT, interwork? Well, of course, MMT is about saying governments can be bigger, they can afford to borrow a lot more because then they have to pay it back. My argument is yes, but what do they do with the money? What are they doing? Is there any evidence, any signs of government spending their money well, or are they actually just throwing it down the toilet or just investing in things that don't make a lot of sense? That's the problem with MMT. The stablecoin route allows the Federal Reserve to do even more than they could do previously with less controls. And that for me
You
is
mean the
one.
government? You mean the government to do even more than
Yeah,
they could before with
yeah,
less controls? Yes,
yes.
that's right. And a shout out to Phonetica, a very switched on contributor from my community. So you've nailed it there that the Fed is losing its grip. You don't need the Fed anymore. Think about all money is a technology. Some people they freak out when they hear that. It's like how money is not a technology. Of course, it's a technology. It wasn't like there was the Big Bang, or if you want to go religious, on the seventh day, God said, and there will be the Federal Reserve. Money is simply a technology. It's just a technology that hasn't evolved as everything else around us have evolved because those who control the money, they don't want it to evolve. And many people might be saying, well, hang on a second, my internet banking evolved. And it's like, no, that's just an interface to what's happening in the money in the background. And you say, but I can see my bank account on my phone. That's evolved. Again, that's just an interface to what's happening in the background. It's like having an old, I don't know, cooling system, and the controls to the cooling system look like they've evolved, but what's happening in the background has not evolved at all. Or maybe an engine. You might say, well, hang on, I've still got, it could be a bad analogy. Think of technologies that evolve from its core up. We go from, as an example, a horse and cart. Then it evolved to a steam engine. Then it evolved to an internal combustion engine. Then it evolved into electric motors. And you want to go a bit further when it comes to transport, it evolved to prop engines and turboprop engines and turbine engines and jet engines. So this propulsion that has evolved for transport over time. Now we look at information. How has that evolved? Well, first of all, what we were doing, we were grunting at each other. Then we were putting paintings on walls. And then we were, I don't know, yelling at each other across with smoke signals as an example. Then you had Morse code and radio and television and newspaper, not in this order. And now we've got internet. So information, the passage of information has evolved. But money, particularly from when the creature of Jekyll Island, from that era period or era there, money has not evolved. How is money created? Money is created through debt. And how is that debt created? Well, as you were saying, the government in the past, they issue a treasury or a bond and they go to a Federal Reserve. We'll use America as an example, but all nations do this. But to keep it simple, let's go with America. So America says, the government says, we need money. Okay, well, where are you going to get money from? Okay, we're going to tax the people. All right. You can only tax them so far, and you're spending way more than what you're taxing. Where are you going to get more money from? You don't actually produce anything. You just you just produce laws and you just take money from the people. So where are you going to get the money from? Well, I'll write an IOU. The Treasury will write an IOU, and we'll give it to this entity called the Federal Reserve. And the Federal Reserve is neither federal nor has reserves of anything. And then this Federal Reserve is going to print money out of thin air, give it to the US government, and then the US government has to pay that money back with interest on money that never existed in the first place. Now, love or hate Trump, he's had a gutful. You might question his motives, but the truth is, those who understand the monetary system, we've had a gutful. It is the biggest Ponzi scheme in the history of humanity where someone prints nothing out of thin air, lends it to everyone else with interest on top of that. And then you, we, the taxpayer, the government, whoever, the real people, have to pay money back to an entity that created that money out of thin air and then put interest on top of it. What we're seeing now is that we can leapfrog the Federal Reserve. I don't need you, Federal Reserve. The Treasury, the Treasury can now say, right, instead of giving this IOU to you, Federal Reserve, and you print money out of thin air, and I've got to give you money that you never had in the first place, I'm going to write this Treasury, this IOU, and I'm going to go give it to Tether, a stablecoin provider. And I'll say, hey, Tether, I want you to produce 1 billion stablecoins for me. And Tether's like, yeah, no problem. What are you going to give us in return? And I said, well, first of all, we'll give this IOU. Second of all, we'll give you the backing of the US government. And third of all, we'll give you some interest if you want. And Tether, as an example, goes, well, that sounds like a pretty good deal because I don't have to go plow the fields. And even though you're offering me a lower interest rate than what you're giving the Federal Reserve, I don't care because all it is for me is pressing some keys on a keyboard. And I'm going to get backed by the United States government, and I'm going to get fees for the people who use my stablecoin, and I'm going to get interest on the treasuries. So, of course, The stablecoin providers, they love this deal. And America, of course, they love this deal because they're like, well, hang on a second, we can now print even more treasuries and spend more money and pay less interest on it. And who doesn't like this deal? And it all goes to where you're leading the conversation correctly. You're saying, well, who's in charge? And if America is, if you look at again America, who's the top of the Ponzi scheme? Is it the person who writes the IOU, the US government, or is it the person or entity who prints the money out of thin air to pay the IOU? Now, this is where it gets quite philosophical. I would suggest it's the person who prints the money out of thin air. Both are questionable entities where one can just say, I'm going to write an IOU, and all of you American people and the world, you're going to pay for this debt that I'm printing out of thin air. The other entity is like, sweet, I'm going to print this money out of thin air, and then you're going to pay me back with interest on top of it. Real money for fake money that is real value, real effort, real output for my fake money, my fake output, my fake effort. So now all of these entities are realizing that they can leapfrog the Federal Reserve, but it actually goes a step further. You don't actually need commercial banks anymore because with fractional reserve lending and DeFi and cryptocurrency, it's so efficient that you don't only not need central banks, but you actually don't need commercial banks anymore. So this is why, again, it goes back to there is a massive currency war happening right now, not just between America and China and Russia and BRICS and pick your nation. No, not at all. And not just between the United States government or the Treasury and the Federal Reserve, but in fact from everyone who gets to issue money. If you can fractionally reserve lend money, but now there's a system where in fact you could borrow directly from the government because it's very efficient to do so. We already have DeFi. This isn't a theory. This is a practice that we do already in the crypto land. It's very easy to borrow money from a decentralized financial platform. I don't need to go to a bank. I don't need to put in all these amounts of paperwork. I simply put in my, if you will, digital application, and if it's approved, I pay back, if I've got the collateral as an example, I pay back that loan with some interest. Well, now because this is so efficient, why do I need a commercial bank? Why do I need a federal bank? Why do I need a central bank? Why don't I just simply go directly to the governmental bank? But then it's dangerous for all of us because, so, well, how do we trust the government? And it goes back to we don't have a cost of living crisis. We have a cost of government spending crisis. So if this technology, it's this, it gets quite deep, and I know you already understand this, and you've set up this conversation perfectly. We're now in a situation where we're like, hurrah, we've overcome the Federal Reserve. Well, congratulations, you've now just pushed that power into a government. You want to trust them? Oh, well, we can vote out the government. Well, let's review. If the government can print all the money in the world, what type of controls do you think they're going to put on you and the media and the narrative and any competitors? And you say, all right, well, we'll go to a CBDC. Well, again, a CBDC is just it's just another fiat, which is better for the government and worse for us. So then you say, all right, well, we'll go to gold. We can trust the yellow rock. Let's go back to the yellow rock. What's the supply of gold? How am I going to spend gold? Where's the gold going to be centralized? Okay, we'll just write a note against the gold. We've been through this before. We write a note against the gold. The gold is centralized, it's diluted, it's double spent, it's confiscated, and the money is printed without limit. So we're now getting these worlds converging together where we spoke about this years ago, Martin. You said years ago, and I still remember clearly, you said you are certain that traditional financial systems and Wall Street are going to start to come in and start meddling with Bitcoin. And I said, well, of course they're going to do it because there's money to be made here. But what they can't do, Martin, is that they can't change the architecture of Bitcoin. So you can change how you mess around with stablecoins. You can change how you mess around with fiat. You can change how you mess around with many currencies. You can change how you mess around with gold. What is the supply? Is there a futures market? Is it being double spent? Has it been clipped? Is it diluted? Is there in fact a huge supply somewhere in the ground that they know about that they're not telling us about? All of these are things that we can manipulate with those types of monies. You can't do it with Bitcoin. Why? 21 million, verifiable, open, neutral, borderless, censorship resistant, where the transaction is the verification. An epic battle is taking place right now, a huge financial war. Someone's going to win and someone's going to lose. What's going to happen, in my opinion, is all fiats everywhere are going to fail. The US dollar will be the last one to fail, And in the background, Bitcoin will continue to get stronger and stronger and stronger. I didn't say gold's going to fail. Gold will always have value. Gold will always be desired. And same with silver to an extent. But when are we saying, and actually, if I may, I put this question to you, Martin. Do you see, with your experience, do you see gold as a currency or a money or a store of value or all of it? What is gold to you?
Well, that's fascinating because if you go back in history, of course, at one stage, gold directly backed the currency. So effectively, it was the ultimate store and the ultimate value point. And then, of course, the US disconnected themselves from gold, and it's gone downhill from there. In my view, it's allowed them to do this inflationary printing for year after year after year after year, which is the devaluation of assets. House prices not rising. What's happening is the value of your dollar is going down and down and down and down and down. So you need more of them to buy anything. That's actually what's really going on. So
do you apply that same thinking to gold as well?
Yes, absolutely.
Yeah, me too. You and I have consensus. We have consensus.
Yeah. So as you said earlier on, actually, if you look at it in real terms rather than just the score on the board, it's roughly holding its value, right?
Yeah.
And that's the critical point that people need to understand. So at the moment, it's interesting that people are now saying, well, people should hold 20 to 30% of their investment portfolios in gold. When you ask them why, it's because everything else is, well, looking dodgy, basically. And the reason why gold is where it is currently in real terms, rather than actually inflation-adjusted terms, is that people are actually very concerned about the other financial systems and markets that we've got. If you look at the stocks in the US, the stock market is all over the place because you've got a relatively small number of very highly valued stocks in the AI sector. And now people are beginning to wonder whether the 550 billion of capex that they're spending, some of which is now being effectively funded by debt, is actually going to pay back. And if you look at the other elements within the stock market, there are a few that are holding their value, but a lot aren't actually. So the question of what is gold, it's partly this value, store of value, this center of gravity, this sense of certainty. But when you actually start peeling back the onion, it's not really as certain as it really is, right? It is a backstop, sure, but you can't really buy your McDonald's with a piece of gold. It's not easy to transfer.
And I can't use it on Amazon either.
Exactly right. It's difficult to move around the place. Blooming heavy apart from anything else. And so if you go back to, going back to a medium exchange, a store of value, etc., all those definitions of what money is, actually gold sort of doesn't fit that well.
It's certainly it's certainly not a medium of exchange.
Yeah.
That people believe it's a medium of exchange, but I give you a real life challenge. Go try and use gold at McDonald's. Go try and use it at Woolworths. Try and use it on Amazon. And I'm not saying that to be facetious. I'm saying literally, if gold is money, how do you spend it? Oh, well, I can just verify it. Well, how do I verify it? Well, you get a little machine that goes blip. And it's like, well, I don't have a little machine that goes blip, do you? And it's like, where do you get these little machines? And I want everyone to think, I love going philosophical with you, Martin, because you think how far we've come as human, as civilization. How far have we come in energy, in medicine, in transport, in communication, in culture, in language, in everything? Think of all the advancements we've made as humanity, as humans. And I put this to everyone. I say, do you really accept that the absolute best we can do in all the technological advancements we've had in humanity, do you really accept that the best we can do is fiat or a yellow rock when it comes to money? And I say, come on, we can do better than this. And by the way, we have done better than this. Is the very best we can do in the technology, the evolution, the use of money, a yellow rock or an IOU? Is that really the best we can do? And I say, no, we have done better. It's right here. And once you actually see it and you go beyond, I heard Bitcoin's a scam, or this is dodgy, or I lost money on to some scammer. Once you actually push past that, and I'm now coming up to 6,000 hours in Bitcoin, 6,000 hours on top of an economics degree, on top of a lifetime of adult lifetime of investing, on top of constantly trying to learn not just what Bitcoin is, but what money is. Bitcoin is the pinnacle of the fiscal evolution of humanity. Now, I know that statement is kind of big, but there is nothing else out there that can do what Bitcoin does. And the argument is, of course, well, what if the internet goes down? That's the biggest argument I get. Okay. Well, what happens if the internet goes down? Well, you don't buy your loaf of bread this afternoon. And they say, no, but what if there's a massive war and no one can spend money? Then I want gold. And I can say, I can assure you, having been in places of war, where if you are really serious about survival, you're not worried about yellow rocks. You're worried about food, water, fuel, and ammo. So again, it doesn't mean that gold doesn't have a value. It doesn't mean that art doesn't have a value. Value is in, if price is what you pay, value is what you get. But value is subjective in itself. Some people value Pokemon cards. I don't. Some people value Louis Vuitton man bag, landfill crap bags. I don't value that. Some people value going to a sports ball game and watching men run around playing with a ball. I don't really value that, but I recognize and I understand many people do value that, and that's fine. So there will always be a value for gold because people value that. But gold is not performing as a money. I can't spend it. I can't verify it. I can't verify it instantly. There's too much friction. So we go to a dollar. Well, we can't use a dollar because that is no store of value, and they keep printing it. So humans will have to deal with massive failure. Massive failure is coming here. There's going to be massive market failure. There's, as all fiats always fail. They always fail. And we're going to see eventually, once we drop our egos, once we understand technology, once we realize that, you know what, planes can actually fly, and you know what, an internal combustion engine is okay, and you know what, I can store my files digitally without the world ending. I'll give a quick story. When I was doing my officer training many, many years ago, I remember clearly being taught by this old officer. And it was, you do lots of things in military officer training, right from, I don't know, killing people to storing files. And this class was on storing files. And I remember clearly that she said, okay, so once you've saved the file here, you print it off and you put it into this file. Now, us as young officers, we're looking at this old woman and we're saying, many of us, I was the one who had the courage to put my hand up. I said, ma'am, why do you print the file? And she goes, what do you mean? Why wouldn't I print the file? And I say, well, because it's a waste of paper and you've already saved the file. And she said, I think it's a really good example. She said, she used the word trust. Would you really trust saving that file on a computer and not putting it in a filing cabinet? And because we're all young officers, the entire room goes, yeah, I would trust that. I would trust putting that file into a digital file and not printing it and putting it into a filing cabinet. Now, this old woman, bless her soul, she looked at us as if we were crazy. She looked at the entire classroom as if we were fools. But ironically and equally, the entire classroom of young people being raised in a digital age looked at her as if she was the idiot. And you know what? We were right. We were right because now you can see, unlike in the olden days, government archives, they don't print every single file that they make like they used to in the olden days and put it in those paper boxes and then put it into more boxes and then into shipping containers and then archive it for 7 years. They don't do that anymore, Martin. What they do is they store it digitally and they store it in the cloud. Now we're going to money and people are saying, I can never trust Bitcoin because what if the internet goes down? Well, let's go to transport. We could never go onto an aeroplane because what if an aeroplane falls out of the sky? You know what? Sometimes airplanes do fall out of the sky, but we don't give up on the aircraft. And you know what? Cars sometimes do crash, but we still use cars. And you know what? Sometimes the internet goes down, but we still use the internet. So once you get past, well, what if the internet goes down? You realize it's like, but it's going to go down, and that's fine. Now, you and I, of course, we go back to cash. You say, yeah, but Adam, we need to use cash for when the internet goes down, because we saw in the past when there was floods or fires, people couldn't use their card at the supermarket, and they couldn't buy bread and food and water. And I say, well, you're proving my point, because people, they're not using cash anyway. Because if they were using cash, that statement of, oh, well, when there was a flood, no one could buy bread or fuel or whatever because the internet was down and they couldn't use their card. It's like, you've just proven my point. We are already using digital. You already use your tap and pay card. And you say, well, the solution has to be cash. It's like, well, what backs the cash? And in this EU example, it's like, well, don't worry, you can trust us. You can still use our EU digital money, and we're going to back it with cash as well. But not back it with cash. We're going to have the option of cash as well. It's smoke and mirrors. It's grooming, to be blunt. It's grooming the financially illiterate and the old people to say, we know you old people that are going to die out soon anyway. We know you old people don't like this digital funny money. Got it. Don't worry, we've got you. We've got this cash here. We won't tell you we're going to print the crap out of the cash, and it's not linked to anything. We just want to groom you to make sure that you're comfortable during this transition. But you're going to turn off the cash anyway. I can prove it as another example. I cannot spend Australian cash on an Australian bill at an Australian government shopfront in Australia, in the Australian capital or any city for that matter. The Australian government, in many instances, won't accept its own money. It won't accept its own cash. We're already using digital. The question is, do you want to use a digital money that's printed without limit? Do you want to use a digital money that is allegedly backing one for one a yellow rock in a vault that no one can verify and we're not sure how much there is, and they say we're good for it? Or do you want to use a digital money that we're using anyway that is instantly verifiable, cannot be printed by anyone else, cannot be diluted, cannot be confiscated, cannot be manipulated, and is open to everyone but controlled by no one? And once you drop all the egos and the paradigms and the fears, you're like, of course we're going to Bitcoin. Of course we're going to Bitcoin. You know why? Because we've got nothing better available to us, not in a modern world. And if you're going to live in fear about, well, what if the internet goes down? I would suggest, well, get rid of your car because one day it might crash. Never go on a plane because one day it might fall out of the sky. And you know what? Never get into a relationship because one day your heart could be broken. We're moving forward. You need to grasp this technology, or quite literally, have fun staying poor.
Yeah, well, actually, of course, the truth is that you say that we've moved forward and everything's advanced. But if you look at this fundamental structure of many people's lives, they are debt slaves today, just as they were debt slaves 2,000 years ago. And, whilst the medium of exchange has changed and while the society has changed, the basic principle of society is people are in hock, and they're in hock, and they have to continue to pay to survive. They have to work to live, to live to work, to work to live, to live to work. So at one level, my point is, Adam, nothing has fundamentally changed, right? So, everything else has changed, but nothing has changed. And the other point, just on the cash versus everything else, I sort of agree with you that a lot of people are using the card or the phone device to make payment because it's convenient. The difficulty, of course, is that some people have been caught out by that when the power goes down for not just a few hours, but a few days, as we saw with the floods and things. And the other point to make is that at the moment, cash is regarded, it is a medium of exchange, it is allowable to be used, and yet the government is making it harder and harder to use it, which I find absolutely astonishing. You and I both were involved in trying to actually deal with the war on cash some time ago. It's still going on. Sharma's latest announcement about, yes, we're going to continue to allow cash to be used, is very carefully crafted only in certain environments like large supermarkets. And those supermarkets only need to have one till open for cash. So it's not like it's dramatic, right? And if you think about, originally they were talking about it for essentials. Well, no, essentials don't now include a lot of stuff that you might think that it would include. It's excluding small businesses. So basically they have narrowed the aperture. And so I would argue that Sharma's most recent announcement suggests that they are still engaged in the war on cash just as much as they were previously. Now, we can talk about whether that's because the banks don't like handling cash because it's more costly than moving the electronic stuff around, possibly. Or is it actually that the government is still quite keen to control more? And of course, as we move relentlessly towards digital and central bank digital currency, I come back to the issue of control. The problems with the central bank storyline is that they have the switch. They can actually determine if and when and how you use it or can't use it. And, I don't know whether it's true, but many people would say, well, just attach that to a digital ID and a credit score and a social score, and suddenly they've got the controls. So those are factors for people to think about when they think about what money is, how it works, and how the system is actually working. I would argue that the financial system is working against ordinary people at the moment. It's working for those large entities that are actually just, milking us and continue to milk us. If you look at the amounts of margin that the banks are charging in Australia, it's a lot higher than in many of the countries because there's such little competition. Nobody really has done much about that. And it also comes back to this idea of personal freedom. I believe that people should be free to use cash or not use cash, use digital or not use digital. There should be a myriad ways for people to actually navigate the financial system rather than being funneled into just one or just two, because I come back to a fundamental issue of personal liberty and personal freedom. And I want the government to get out the road rather than actually inserting itself more and more into the way society works, which unfortunately is what they're doing at the moment. So to an extent that the Bitcoin story is outside government control and outside some of these things we've been talking about, I can see the attraction. I have to tell you, though, there are a lot of people who are still very, very nervous about this idea of it. Oh, it's just in a digital scorecard somewhere, and I can't feel it or touch it. And, you said earlier on, well, of course, just give it time because, it tends to be older people who are less comfortable with it. Younger people, perhaps more so. So maybe over time it will go there. But I do think there are issues of freedom. I do think there are issues of control. And I do think there are issues also of the debt-laden society that we've built, which is all part of this really weird situation that we find ourselves in.
You give me so many great talking points. Okay, so first of all, the ratio of debt. So as you can see, yes, people have been in debt for a long time, and throughout society, throughout the history of humanity, that first of all, well, maybe bartering was that debt. Well, you do something for me, now you owe something to me. I give you a sheep, you're now in debt to me for, I don't know, a cow. I don't know, that's probably a bad trade, unless you've got a lot of cows and there's not many sheep. The market determines the value of a sheep versus a cow in that market at the time. The value is determined by the market. But what we can see without any doubt that this fiat is failing to the extent that the ratio of debt is much bigger. As an example, in the past it was it depends where you are, it depends which period we're looking at, but 2 to 3 years of annual income for an average home. We're now moving 9 to 11 years of annual income on average for an average home. Again, depending where you are and at what data set you're looking at. But what is undeniable is that we are absolutely more in debt because governments are more in debt.
Yep.
And so long as governments are in debt, governments are susceptible to whoever's issuing that debt. Because you've got to ask the question, who does the government owe the money to? Like, who does it owe it to? Well, you've got bonds in the free market, but then you've got federal and central banks. Why does the Australian government with the military owe money to the Reserve Bank of Australia that's only got people with ties and skirts on? I'm not sure if there's any people with a tie and a skirt on at the same time, but they can be in this day and age. But my point is, you've got these entities, like think of the United States military, how powerful it is. And yet, who's more powerful, the United States military or the Federal Reserve? Because, I mean, let's do the thought experiment. Why doesn't Donald Trump just say to the Federal Reserve, now, again, some of this debt is owed to the free market and to other nations, but let's say we just keep it simple. Let's say the United States government owes that $38.5 trillion to the Federal Reserve, and they just turn around to the Federal Reserve and they say, we're not paying. What are you going to do, Jerome? You're going to get all your men in suits and come and take on my 11 carrier groups? You're going to take on the biggest military on planet Earth? And then you say, well, yeah, what happens if we just say no to the debt? But that in itself is a whole video that could be discussed for many years because some people have said, why don't we just say no to the debt? Well, of course, the debt isn't just to the Federal Reserve when we're looking at America, it's to other nations and it's to other people. So everything would crash very quickly. Now, I want to reference Jeff Booth here. So the natural state, he says, the natural state of the free market is deflationary. The natural state of a free market is deflationary. What does that mean? It means as technology evolves, if money were real, if money were pure, if money were a real store of value, everything would get cheaper because we get better at producing things. We get better at moving things. We get better at researching things. We get better at communicating things. Everything becomes more efficient. As an extreme example, I don't know, in the past, going from Sydney to London, what was that on a sailing ship? 6 months if you made it through. Well, now I can do it in 24 hours, depending what aircraft you're on, depending how long you're stopping for. But we've gone from 6 months to one day. 6 months to one day. Yet everything around us is becoming more expensive. Why? Because we are not in a natural state of a free market. We are in a corrupt state of a suppressed market. So you say, well, how do we get a free market? How do you actually achieve a free market? Well, you actually need a free money. And I don't mean a free money that the United States government or Australian government or any government gets by writing an IOU and someone prints the money, then the taxpayer will pay it off later in the next election cycle and the next election cycle, by which stage the politicians have already retired. They've got their packages. They've been paid out by the lobbyist. They've got their high paying jobs as a chair in a new position. So that is not the free money I'm talking about. I'm talking about a free money free from control, free from corruption, free from dilution, free from distortion, free from all the crap that we're dealing with at the moment. So you say, right, how do we achieve a free money? Like, how do you do it? Well, first of all, we can't trust anyone. I don't trust you. You don't trust me. We don't trust them, and they don't trust us. Okay, so the first principle number one is we can't be trusted. It doesn't matter who it is. You can't trust America, not because they're bad people, but just because they're people. You can't trust China, not because they're bad people, just because they're people. And you can't even trust, dare I say, the Australian government, not because they're bad people, but just because they're people. We're people. Absolute power corrupts absolutely. Okay, so when we accept that as a first principle, we say, okay, we need a trustless money. Okay, check. All right. What else do we need in a money? Well, it needs to be verifiable. What do you mean? Well, I need to know it's real to the extent that it's scarce. Okay, because if it's not verified, if I can't verify that there's not a trillion tons of gold, well, how do I know really how much value that is when it comes to scarcity? So you start going through all of these checkpoints of what money needs. Well, first of all, it needs to be trustless. It needs to be verifiable. It needs to be open, which means that anyone can use it. Black, white, young, old, gay, straight, this country, that country, it must be completely open and it must be neutral as well. It doesn't discriminate. Open to everyone and neutral. It doesn't matter who you are or what you're doing, it must be neutral. But no, Adam, we must be able to stop it if Russia goes into another nation. No, so straight away you've broken the money. That's why part of the reason why the US dollar is going to collapse now, because everyone's like, if we do something that America doesn't like, we get no trial, we get no appeal. America said they don't like us. They're confiscating our bank accounts. We're out of the system. So then you start to go through all these things like, well, it also needs to be censorship resistant, because if it's not censorship resistant, when Canadian truckers stand up and say, we don't like what you're doing, Canadian government, we are Canadian people, we are Canadian taxpayers, and we are peacefully protesting. And then the Canadian government goes in, right, we're seizing all your bank accounts, we're blocking all your money, we're going to starve you out. You Canadian truck drivers, how dare you speak? How dare you protest peacefully? We don't like what you're saying. We're going to starve you out. So that then money can't be that in that instance. It can't be censorship. It needs to be censorship resistant. And so you start to go through all this. Well, what have we got then? So it can't be the dollar. It can't be gold. What can it be? What can it be? The euro. And so once you go through all these open, borderless, censorship resistant, trustless, neutral, it's like, well, what have we got? What do we have? So long as we understand that we are not free because we have never been in the natural state of a free market where houses should become cheaper. The technology is quicker, better. When you go through Europe, isn't it fascinating? I mean, you're there now. You look at some of the architecture that's in Europe in particular, absolutely spectacular. They didn't have the diggers and cranes and computers and workforce. Well, maybe they had a better workforce, depending how you view it, but they didn't have the technology that we've got today. And yet, look at what we build now. We build absolute crap. We don't build stuff that would last for centuries. No, we could, but we don't. And why don't we? It's because the money's broken. Once you fix the money, everything else falls in place. We then go to war. How do you fund war? Well, if a government wants to go to war, in the past, they'd sell war bonds. First World War, we must go fight the Germans. Who wants to support us? Well, I guess I'll support you. What are you going to do? Right, the British government, we're going to sell war bonds. You give us money, British people, we'll go fight the Germans and we'll pay you interest back on these war bonds. Okay, well, that sounds like a good deal. Second World War. Who wants to buy these war bonds? No, I'm not doing that again. I'm not giving you money. All right, well, pick your war. Afghan war, Korean war, Vietnam war. How do they fund the wars? How do they fund the wars? It's not like America sold the Empire State Building or sold lots of oil to go to war. No, no, they just printed treasuries. They printed money out of thin air. Now, of course, that's where the US dollar was essentially completely delinked from the US, where gold was completely delinked from the US dollar in 1971, when Nixon said, hey, we need to protect the dollar against speculators. That's not what was happening. America was broke. They had been at war. But America was just the front line of what we're all doing. This is nothing against America. We're all doing the same thing. How did we afford to go to Afghanistan for 20 years? How did we go to Iraq 1, Iraq 2, Korea, Vietnam? Pick your war. How can we afford to fund all of these wars? Well, we just print money out of thin air. And this is where you start to see that not only is the money that we're using at the moment not putting us in a natural state of a free market of deflation, that is, things get cheaper because your money gets more purchasing power and because we evolve with technological advancements in every area of life. But equally, once you start to realize that governments can print money out of thin air beyond their insane spending for pick your department in pick your nation and pick your side of politics, it's all neutral here. Once you actually realize, hang on a second, if I can't print my way into war, if I can't just print all of these bombs and aircraft carriers and soldiers' uniforms and soldiers' wages, there will still always be conflict. But the conflict that happens now will be very serious to the extent it's like, hey, you know what? This is actual self-defense. This is actually, we don't want to go and invade some other country. Now, I've served in uniform, and some people call me out and they say, well, you're a hypocrite. And I say, no, no, I believe in the right to self-defense. I believe in protecting democracy. I believe in protecting my fellow Australian brothers and sisters. And I believe supporting my allies. But that's very different to a government saying, yeah, we don't like what those people are going to do. Let's print all of this money and send all of these men to go over and kill these other men, whilst everyone in both nations goes broke because they keep printing money to fund this war machine. So it's very big, I realize. But once you make the connection, you say, oh, I get it. Fiat isn't only market failure. Fiat isn't only a Ponzi scheme. Fiat isn't only the foundation to a debt-based economy, but fiat is in fact a money of war. And once you realize that, you go, well, what's the money of peace? Well, is it gold? Well, look at some of the conflict that we have for the money of gold. Perhaps the money of peace is Bitcoin.
Yeah, and fascinating in the chat, actually, people are coming down, of course, on various sides as you'd expect. But the two questions I wanted to sort of just funnel the conversation towards as we come towards the end of the show. The first is I just want to go back to the digital euro for a second, because this was actually, I thought, fascinating. Digital euro. We aim to be ready for a potential first issuance of the digital euro during 2029, assuming the necessary EU legislation is adopted in the course of 2026. They say currently there is no European digital payment option that covers the entire euro area. The digital euro would be a European electronic means of payment, accessible and acceptable in all euro area countries, which suggests to me that it's geo-blocked. It is within the euro. The euro digital will be a store in an account set up by your bank or with a public intermediary. You can pay in digital euro either online or offline with your phone or card, and it would be an electronic means of payment available free of charge for anyone to use. So, when you actually sort of pull this apart, you can see that they're actually sort of funneling people down one direction, right? And then going back to the other question, in the chat, there was a question that popped in a little while ago. So, talk about the different stable coins. What's your favorite stable coin? Because not all stable coins are equal, are they?
Look, remember, a stablecoin can be pegged to anything at all, and as in, so you've got Australian stable. Sorry, I don't know if you can hear Dino digging next to me. I know you're a dog guy. You know when they just dig on his mat? There's nothing to
Isn't
dig
it
up.
funny? Yeah,
Yeah,
mine would do it too. Yeah,
universal dog language.
yeah,
So the number one coin, stable coin is Tether. Uh, but then you've got USDC, which is the second biggest one. Now, Australia has its stable coin, and the euro will be creating its stable coin. But just on your point, when it came to what the euro is doing is with geographical boundaries, that stops leakage from an economy. That's what they're trying to
yes.
do there. Yeah, they're stopping, capital flight essentially. Hey, we get to print the money, but we don't want any leaks from this thing. We want to make sure that the money stays here
It goes
because,
back to
it made
control, right?
exactly
Yep,
control. Absolutely.
yep.
Now, it also touches on, hey, all they're selling there, they're just selling the medium of exchange. They're not selling the store of value. They're not saying, hey, buy our currency and use our currency and you get richer. What they're saying is that they're not even mentioning if you're going to get richer or poorer. Of course, you're going to get poorer because it's going to be diluted. They're saying this is just going to be really convenient. And it's a difficult sell to those who are already in the digital space. It's because to me, what I'm seeing there is they're selling to old people because younger people, we're already in the digital space. We've already got this convenience. We don't need your currency. And the third point on that, before I go into answering your question specifically, is I agree with what you said before. Is why can't we choose any currency? So I stand by democracy, where hey, if you want to use the dollar, go for it. And if you want to use a yellow rock, go for it. But don't make me accept your yellow rock at Woolworths. If Woolworths wants to accept yellow rocks, go for it. And if they want to accept US dollars, you know what? I am a supporter of freedom of choice, freedom of speech, freedom of association, freedom of commerce. I agree with you entirely. We should have the option to choose any currency. I've got no issue with that whatsoever. But of course, you can't have that because tax and terrorism. That's the ultimate throwaway line there. When it goes to answering your question about which stablecoin there is, so I was very concerned about Tether when I first when Tether was first launched, because it was a new technology. Why was a stablecoin created? A stablecoin was created to be able to move value for crypto traders from one exchange to another exchange. I've got some value here in Bitcoin and Ethereum and XRP on this exchange, but I want to go over to that exchange to buy some Dogecoin or something else. But I don't want to move my Bitcoin or Ethereum from this exchange to that exchange because of the volatility in the time it takes. And equally, I don't want to go to a bank. I don't want to sell my Bitcoin, go to a bank, then buy back into another exchange. It's too slow. There's too many fees. So there was a gap in the market for the technology of a stablecoin. And the stablecoin was initially used to move value from point A to point B, primarily from exchanges, this exchange to that exchange. Then it evolved, of course, moving into, well, hang on, instead of selling into dollars, I'll just sell and buy and trade into stablecoins. And then it went, of course, it evolved onto that. It's like, hey, I can pay all my bills in stable coins because people like stable coins because it's pegged to the US dollar. But then other nations said, hey, I just want to use that stable coin, the American stable coin, because the American backed stable coin is better than my local currency. And then the government came in and said, well, hang on a second, we can use stable coins because now we can print treasuries and get these stable coin companies to print stable coins for us. And then the next step to this is that the government's going to say, well, hang on a second, this is just code. We don't even need the stablecoin companies. We don't need the banks. We don't need the central banks. We don't need the commercial banks. We don't need the bond market. And we don't need the stablecoin companies. We're just going to print it ourselves. The biggest provider at the moment, by far, is Tether. Tether is the biggest one. So, which one do I like best to answer your question specifically? I like Tether the most because it's got the longest track record, it's got the most amount of volume, it's got the biggest market cap, and it's working with the United States government. So Tether's market cap at time of recording is 186 billion, but its volume in the last 24 hours, the volume of trades, of movement of Tether, either in and out of positions or moving around the world, is $65.356 billion in 24 hours. What's very interesting, Martin, is in the top 40, to give you an idea of how big stablecoins are becoming, in the top 40 cryptocurrencies by market cap, in the top 40 cryptocurrencies by market cap, 10 of those cryptocurrencies are stablecoins. That means 1 in 4. Now, remember, there's over 2 million cryptocurrencies, but I'm talking about the top 40 here by market cap. The top 40 market cap cryptocurrencies out there, 1 in 4 of them are stable coins. And guess what? That number keeps increasing. I can remember clearly years ago, where there was only one stable coin. It was called Tether. Then we moved to two, three, four, five. Now they're breeding like rabbits. They are breeding like absolute rabbits to the extent that the government is using stable coins, and 1 in 4 stable coins in the top 40 are stable. 1 in 4 of the top cryptocurrencies are stable coins. And even more alarming, if you will, is that now everyone's rushing to make their own stable coin. What's interesting to me is that a stablecoin is a digital representation of a dollar. But in my vision, a stablecoin is also going to be a digital representation of a barrel of oil, a bag of wheat. Why not a bottle of water? It could be that. There's no limit on what you can do on this technology. And of course, as we move further on, a stablecoin is going to be real world as assets. That's where everything's going to be digitized. Ownership for a house, ownership for a painting, ownership for a taxi. It's just going to be digitized and it's going to be broken down into smaller pieces. Slightly different from a stable coin, but the technology is here that we can start to do all of these things.
And just one quick question, which came in the chat there was yield bearing stable coins. So, how does that work?
Okay, so you take the stable coin and Skynet, a very valued member of our community as well. So I'm glad you raised that, Skynet, because it's funny. Just before you raised it, I thought there's one thing I should point out here. Stable coins can be a very handy to be put into DeFi products, decentralized financial products. So as an example, another reason why I like stable coins is because I can take a US dollar stable coin and easily and very quickly, with little friction, get 5%, even more. Typically, the higher the percentage, the bigger the risk. But 5% is a very standard return on a US dollar stablecoin that I simply hold in this wallet here. I can put it into liquidity pools. I can put it into decentralized financial products. I can pull it out instantly. I can put it there for a day. The yield is paid in some instances every single day and then compounding. And so once you start to realize that, you're like, well, hang on a second. If I want to earn 5% yield on an Australian deposit, I've got to go to a bank. I've got to make a deposit. I've got to sometimes do all this paperwork. And then I've sometimes got to lock it up for 3 months, 4 months, 5 months, 6 months. I can't access it if the bank's closed or if they put a block on my account. So then you say, well, hang on a second. If I just put it into a stable coin, I get 5%. I can do it at 4 o'clock on a Tuesday morning from my computer, wearing no pants and holding a beer in my hand with zero friction, with zero permission, instantly verifiable, instantly traceable. And anytime if I change my mind, I'm like, oops, I need that money back. The wife has caught me. You just press withdraw and you take it straight out. So stablecoins, beyond the utility, the store of value components, like, okay, well, a stablecoin is still pegged to the US dollar, so it's still losing its purchasing power. But if you want to throw 5% yield on that, 6% yield, some instances 7% yield, it's like, you know what? That's not too bad. And noting that it can compound daily depending on the DeFi product you're using. A lot of people who are opening their eyes, they're saying, I'm pulling my money out of the Australian bank, the New Zealand bank, the Canadian banks. I'm pulling it out of the American banks and I'm going to put it into US stable coins and then I'm going to put it into decentralized financial products. Now, in the big picture for America, America doesn't really mind if you pull your money out of an American commercial bank and then put it into a US Treasury backed stablecoin to get into a decentralized financial product. Why? Because it maintains a demand on the US dollar. We can sacrifice the commercial American bank. Yeah, big picture, who really cares? When you, as the American government, you can print treasuries to print stable coins. So the world demands these stable coins, and then the yield isn't provided by the US government in this instance. Yes, there's yield on the treasury, but the stable coin itself, the stable coin, the yield comes from decentralized financial products, where essentially there's many ways you can earn yield on it, but you're providing liquidity for liquidity pools so people can trade in and out of their positions. All verifiable, all open. Now, of course, there's lots of scams, absolutely. Just as there's lots of scam businesses and lots of scam websites and lots of scam phone calls that you get. But once you filter through all that noise, do a little bit of research, go where the market's going, do what the big boys are doing, easy money. Easy money to the extent that it's instantly verifiable. And if at any time you're unsure, you just press withdraw. Whereas when I'm doing a term deposit with a bank, if I change my mind, they don't let me do that.
So a question just come in. How does online payment differ from stablecoin payments?
When I'm doing a great question. If I do an online payment now, so I'll do a local one and then I'll do an international one as an example. If I get I don't know, electricity bill. Okay. So I go onto online banking. I've got to log on. I've got to put in my biller code. I've got to put in the name. I've got to put in the account number. And then I press transaction or transact or send or transfer. And if it's BPay, there's a fee and it can take up to 3 business days. That's Australia to Australia. If I wanted to do that same thing from Australia to America or London or England or Nepal, I've then got to go and get a BIC code, a SWIFT code, an account name. If I'm going to Western Union, I've got to get the bank address, the person's address, your bank's address. Then you've got to pay a transfer fee. You've got to wait 3 business days. There's an exchange rate. And it's like, oh, kill me. This sucks. Okay, now we go to a stablecoin transaction. A stablecoin transaction, whether it's me to you, so Australia to England, or me to you right next to me, you just give me one wallet address. It's just a string of characters, numbers, and letters. And I go copy paste, $50, withdraw. That's it. It's the same. The analogy is this. Why would I use an email when I could write a letter? And it's like, well, an email is much quicker and it's a lot easier. And it's like, yeah, but in a letter, I can still write it and I can put a postage stamp on it and I can put it in an envelope and I can go down to the post office and I can pay the fee and I can put it in. It takes 3 days. Yeah, you can do that. Or you can just email me. Or take it a step further, you can just text me. And that's the difference. The difference is, yes, you can still do these transactions through very slow, cumbersome digital air quote systems, but you're paying a lot of money. It's taking a lot of time, not just for the time for it to go from this account to that account, but the time for you to get the BIC code, the SWIFT code, the account code, the address, the name. Oh, it's just a nightmare. Just text me the money. I can text you a file. Why can't I text you money? It's because the banks don't want you texting money. They want to slow it down. They want to get the exchange rate. They want to get the fees. There's no interest for them to make it better for you. The free market has spoken. The free market's like, well, here you go. Here's a convenient method. Just text it.
Yeah, and as Scarlett said, of course, the payments go through the number of middlemen, whereas the stable payments can go A to B directly. Now, as we come to the as we come to the end of the show, I want to just come back to the question that I posed for this show. So, stablecoins, is it a financial revolution or is it a financial coup? How would you answer that?
With one word, both. It's both.
Okay.
It's the perfect question because it is absolutely a financial revolution, but it's now being take any technology, like an aeroplane. It was for fun at first and transport. Well, now an aeroplane can drop bombs, and a gun. We could easily defend ourselves or hunt animals to feed our family. Well, it can also be used to massacre people on a beach. It can be both. Fire can heat your home and sterilize water and cook your food, or it can burn your house down and scar you for life. And stablecoins, the reality is they're the same. If they're hijacked by governments to do what the United States is doing, and I don't even blame the United States, they've got the technology, the tool is there. They've got to use it. And I'd actually suggest to the Australian government, you've got to kind of do the same as well, because if not, the banks are going to have you over a barrel. It's like this, Martin. Anyone who turned their back on the internet of information, look at how well, air quotes, they're doing now. You can't turn your back on the internet of value. And good, in my opinion, and I think you'd agree with this as well, good will eventually prevail over evil. There's going to be rough rides. There's going to be a lot of friction. There's going to be a lot of confusion, a lot of fear. There's going to be a lot of people wrecked. But in the end, this technology will be used for good. Stablecoins have a purpose. Gold has a store of value, but I'm not going to use gold every day. I'm going to use a dollar every day. When we use it, the same analogy, Bitcoin is the store of value and stable coins are the immediate transactions that you can do. What do you want the stablecoin to be backed by? You choose, I believe, in the free market. But as you said many years ago when we first started talking about Bitcoin on our channels, the big boys are going to come in, the Wall Street juggernauts are going to come in and do what they always do. They're going to get their grubby little fingers into it. They're going to try and play their games. They're going to try and make a profit out of it. And you know what? It's a free, it's a free market. I hate to say this, but they've got to do what they've got to do because that's the free market. But as long as we've got the choice, do you want to use this currency or that currency? That's also the free market. Where we're not a free market is where someone comes in and says, no, if you don't use our money, we're going to put you in a cage. That's what we must stand up against. We must allow the people to choose, and we must stop tyrannical organizations, whether it's a government, a bank, or some people on Jekyll Island. We must stand up to those people and say, no, you can only use our money or we'll put you in jail. If we enable choice, the market will decide.
Adam, thank you very much. A very interesting and important conversation this evening. If people want to find more about what you do, where do they go?
Great talking with you as well, Martin. Some really great questions there. For those of you who haven't met me, I'm Adam Stokes. Join me on my channel, Adam Stokes. Read my book, 28 Pro Trader Tips, The Art of Trading. And if you're unsure and you want to get into crypto, head over to my website. Very simple, open, neutral site, thecrypto.land, www.thecrypto.land, where you can do everything crypto safely on one simple and secure site. Whether you're a beginner or advanced, it's all there, one site. All of the links on that site, I trust, I use, and they're available to you.
Adam, thank you so much. I wish you and yours the very best for Christmas and the New Year, and I'll look forward to having you back on the channel sometime next year as we see these things evolve. And of course, seasonal greetings to all our followers and viewers on both channels. Thank you for all your support this year, and I'll look forward to next year. Whatever 2026 brings, we'll be ready.
Merry Christmas, Martin.
Thank you very much, Adam. I'll take you offline and I'll close the show. Right. Well, I hope you found that educational and informative and a bit of fun too. Have a wonderful Christmas. The dogs are here. They are a bit drunken. Oh dear. Oh, what happened there? There you go. That's Meteor. The dogs are ready for the next extravaganza. So that's my next thing to do. And thank you very much for all of those watching today. And again, Merry Christmas, Happy New Year. Next week, I will be on live next week. And we will have Edwin Almeida on 8 p.m. next Tuesday. And we're going to be talking about what 2026 might be doing for property. So join us for that. Otherwise, have a great Christmas, New Year, and we will see you in 2026. This is Martin North from Digital Finance Analytics signing off. Take care.